This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let's have a look at Bitcoin and a bit of an overview of altcoins as well, but there's not a great deal to say about that. It's the same we've been saying the whole time. So I noticed yesterday when I made the video about the bull market has resumed. In fact, it's a brand new bull market, guys. Get ready for the moon. Look, it's clickbait, but it's based on T8. I've been saying this for probably over a week now. Divergence on the money flow index in the past has spotted an absolute low. So we've got our low here, divergence, high low here, marking the absolute bottom. Lo and behold, genius entry point. If you would have caught it, that would have been. What have we got here? Consolidation, downtrend. Oh my god, guys, we're going to zero. Hit a low here, a higher low here, marking once again the absolute low. Oh my god. Is that a genius entry again? Based on... Yeah, I suppose it is. Oh god, what's happening here? We're going to zero, guys. Everybody on the comments going, you're an idiot, man. It's going to 8,000. It's going to 3,000. In fact, it's going to zero. As you can see, we've got the divergence. Hang on a minute. Does this mean we've spotted an absolute low? Is this the low again? Well, look, I'm not saying it is. I'm not saying it's not. Who knows? And as I was saying yesterday, look, the divergence is clear. The historical relevance of that divergence is clear as well. We can come down to hit the 200 simple moving average, about 22,000, give or take. And we will likely still have divergence because this is such a significant low, it could easily happen. So, I'm not suggesting that the absolute low as far as price action is concerned is in. But what I am saying is that, interestingly enough, if we measure the significance of a divergence on a weekly money flow index, it has actually, in the past, caught the absolute low, making you an absolute genius. But I can understand, you know, some people just cannot take buying low. They just can't take it. They always want lower. I remember it back here when I was buying 6,600. I said, look, if you think about what we're doing here, I'm just going to buy 6,600. The reason being is that it was slicing right through previous price action, and it would suggest that this area should likely hold. And if it doesn't, no big deal. But the risk to reward seems pretty good, to be honest with you. I'll be buying it here. I had the same problems. You're buying it 6,600. I was like, what's the matter? Are you okay? I'm buying 6,600. It's going back down to 3,000 and then probably 1,000. Why is that happening? I'll tell you why. Because it's been going down this whole time. And it has to go down lower because that's all I can see. All I see is this. Sorry, I've got used to the visceral reactions of the general masses. And look, of course, anything could go down lower. There's all kinds of reasons why they could. We talk about black swans in this channel and things that operate outside of the chart, which is why I sold a lot around the Omicron situation. Because recognizing that there are things that can affect markets outside of charts is true. But, you know, at the same time, charts are still my main bread and butter. That's how I make my living. And you gotta play the cards you're dealt. And the cards I'm being dealt at the moment are pretty good. They're pretty good. They are pretty good, despite, you know, threatening realistically the potential of coming down to the lower 20s. I've obviously got money to buy there, but yeah, it looks quite good to me. And like I say, it can't ignore what it says, how it's performed in the past, and the reactions I get, whether it's on Telegram or YouTube, with people vomiting all up. Those reactions are also quite telling, to be honest with you, because it's those sort of comments and attitudes that usually come in at these lows, to be honest with you, because they're waiting for further downside because they've been told that they can get better bang for their buck. You know, they've been told that and they hold on to that, and you know, their buy orders may sit there forever. They will, you know, I've got my buy order in at 20,000. You know why? Bull market top. It's definitely going to happen. And it may just sit there forever, you know. And I'm not joking. I'm not saying that it will. I'm just saying that there's a good chance that your buy order will be there indefinitely for the rest of your life. and that's why you buy incrementally on the way down. Anyway, so let's have a look at price action at the moment. So the 4 hours, came up towards this 200 exponential moving average on the 4 hourly. So this is one of the main areas we were thinking of yesterday as this move was in the making. I said, look, we've got the power at this stage now to move up towards the top of this descending triangle. We've also got a 200 simple exponential moving average around 32,400. So we'll front run that a little bit. I still think we do have a little bit of power in this move on the short term time frames to move us up to this zone. A lot of resistance in this area. Obviously we've got the trend line, we've got the 200 exponential, we've also got this box as well of what was previously support. It's now obviously going to be resistance, and that starts all more or less at the same area. So we're between 32,400, 32,800, and the very top of that box 34,200. So a lot of resistance above us in the short term time frames here. So I wouldn't be surprised to see this start to consolidate from here. If it has the power, it could move up to this area and then consolidate from here and then get picked up, and then maybe even have the power to break out next month. Now remember, we talk about things going on outside of the charts, and one of those is going to be the CPI report next month, which I expect to show inflation in the US going down, but we'll have to wait and see. We can't be sure either way. It would appear that the rest of the world's inflation is going up still, but America is in a slightly different boat. Their GDP has actually gone up a little bit, so they might actually get away with not going into recession, whereas it would appear that the rest of, or at least Europe, is guaranteed a recession, but America might get away with it being an absolute, certified recession. But we'll see. We need new figures to emerge. There's other reasons why inflation could have gone up actually, despite the rate hikes and the GDP increase for the states. But if inflation appears to go down, and the CPI report is favourable, then markets will resume continuing to go up, right? And that will be felt for Bitcoin as well as traditional markets, which I'm sure you're aware, but they are already going up. So it would appear to me that the CPI is almost baked in. We saw some independent figures suggesting that inflation's going down. They're not the official figures, but independent figures came out, and they made it appear that inflation is actually going down in America. And again, this is exactly what you want to see for the rebirth of markets. I'm not talking straight up to the moon markets. I'm talking about people getting out of their inordinate cash positions and back into some stocks. And some indices, and obviously Bitcoin as well. So that's what we're looking for. I've been in 90% stock position, cash position in my stocks since Omicron started creeping around the corner. And I've got that money is burning a hole in my pocket. I really want to stick it back into stocks. I'm just a little hesitant at the moment until I get the CPI report. Stocks are so slow and the returns are so slow that I do really want to try and gauge the situation with traditional markets a bit more than crypto, because as we all know, you can make mistakes with spot trading on Bitcoin, and you'll be forgiven in a really quick space of time to a large extent. But with stocks, you can actually, they can drag their feet for a prolonged period of time. But Bitcoin's very forgiving. So I'm not particularly worried about the way that Bitcoin goes up and down and up and down. It's all part of the fun, isn't it, really? So yeah, we're looking for rejections around this level on the short term. We've also got the short position still, the short signal, should I say, given to us on the Itchy Cloud on the weekly, suggesting that, the higher we go, the more likely it is that we do get a significant rejection on one of these major areas. Remember, this was generated several weeks ago, and so each one of these levels of resistance, probably the higher ones, I would say, maybe if we were to get up to about 38,000, we probably would get a significant rejection around between 38 and about 40. And that would be the short signal that was generated a few weeks ago on a weekly. Remember, you're looking for a short signal like this to play out over a period of months. It was generated on a weekly chart, right? And so it doesn't mean that as soon as we see the short signal, I was saying this when we got it, when we get the short signal on here, you got to wait. You don't want to short the signal just because we got it. You will short it, if anything, from a much higher area. Just like the one we got on the daily. We got a short signal on the daily a while ago now, and I said, look, the short signal's been generated. All right, here we go, short signal's generated. Give it a couple of weeks to play, and bang, it played. And it played from, lo and behold, the 40,000 resistance, and that was a short that generated a 34% move, right? So we're looking at the same deal on the weekly here. We've got the short signal. We're waiting for it to play. It can take up to a couple of months to play. And just like I've been trying to reiterate to people, you know, I am bullish on this market overall. Obviously, now we've got these reads as well, marking the previous lows. The low, if not already in, will be marked off quite soon if we start to make new lows. I'll be saying to everybody, my granny, you know, my next door neighbor, I'll be saying, I think the Bitcoin low is in, because historically this is what happens. And look at the nature of my DMs. It's just people throwing up all over their laps. They can't take it. They think it's going lower, and that's usually a sign in itself. CPI report favourable. I think it's done. And also, you know, I've been saying, you know, one of my theories is that the bull market actually ended around January 2021. Marking the bull market effectively ready to start any moment. Now you can either measure it from here or from here, and it's still over a year's worth of consolidation, sideways, but definitely consolidating or downtrending when it comes to RSI and money flow index. So same sort of reads you would see in a bear market. So bear market, you know, despite, you know, taking away the price action, when it comes to every other aspect of a bear market, we've been in it since 2021. Yeah, as in like the beginning of 2021. I mean, the beginning of 2021. So we've been in it for over a year now. 18 months worth of bear market when it comes to volume and time. So it's a bit hard for some people to get their head around, and I appreciate that. And I can understand the visceral reactions and the vomit all over the place. I get it, because people don't, you know, a lot of people can't see it from outside of a box. You know, most people live in a box, obviously, and I get it. And you know, it does take a little bit of. You do have to think outside the box, especially now more than ever, when we've got all these issues that are affecting charts, all commodities, all indices, all stocks, all coming down all at the same time. And then people are still quoting the 4-year market cycle, which, you know, like I say, if we think about parabolic peak and bubble pops, it was between January 2021 and around May. That was it. So the 4-year cycle, obviously, you know, would have popped around December, and you can think about it as in price terms. But then you can also think, well, actually, that doesn't match. That doesn't match the way that it's worked in the past. Price went higher, but volume and sentiment went lower for a lot longer prior to that. The bear market could have easily begun over around here, meaning that the bear market is likely ending or already ended around here. But there are many things outside of this box to think about, and inflation being the main thing. Remember, everything's consolidating. It's not just Bitcoin, it's not just crypto, everything's consolidating. It's all coming down. I wonder why. Anyway, I leave it for the comments. Feel free to say whatever you like. I love it. I absolutely love it. When I'm an old man sitting in a nursing home, my ambition is to be a troll. So I'd like to get my practice in. So feel free to leave whatever comment you like. As I'm on holiday next week, I'll be sitting in the caravan responding to each one of them with a smarmy, smart-ass reply. So feel free to drop those things. Remember, nobody knows. Nobody knows. You don't know. I don't know. But the charts do tell a small story here, which is that absolute lows are generated around these levels when it comes to volume and time. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.